People are deciding not to completely reposition or revise their overall outlooks for next year based on what's going on today, whether it's these, localized shutdowns, restrictions, or the case surges at the moment.
Yeah, we're looking at the opening bells now. Mike, you'll stay with us, but I want to show you this. Opening bells, the CNBC real-time exchange. Down at the big board, education nonprofit Team Wilderness, and up at the Nasdaq, renewable energy and ESG SPAC, Project Energy Reimagined Acquisition Corp. So we could talk about the open. Mike, again, we're not going to have the greatest year ever in terms of S&P record highs. That was in 1995, where we had 77. We've put 70 in the book. So it looks like we're going out with a bang. And then the big question is going to be what comes next, if we can take some of this momentum and how far we can carry it into the new year.
Yeah, and actually, in other respects, this year is going to end up resembling 1995, 2013, 2017. These are years I've been mentioning for months now, where you had very minimal pullbacks, no 10% correction along the way, lots of rotations, market really, all the surprises seem to come at the index level to the upside as opposed to underneath the surface. And then what comes next is kind of interesting. You rarely see a great year like this both repeated, but you also see it rarely give way to a truly damaging year. So it seems as if it's logical to expect, let's downscale our expectations a little bit. We're not going to compound at 30% every year. This is the third year in a row we're doing 20%. I think we've doubled off the 2018 December low. It doesn't owe us anything, but interestingly enough, there's been enough wear and tear under the surface. There's enough stocks that seem like they have catch up to do that it's not as if we were barreling into the year as we did in 2018, where everyone thought it was great and getting better. We had a corporate tax cut, and the momentum blow off was very dramatic.
Mike, I'm curious.
Let me ask you this.
Go ahead, Scott.
Oh, sorry, Les. I just noticed, what do you make, Mike, of the divergence between the S&P in this last burst, if you want to call it that, of the year, and the fact that Bitcoin, as I look at it right now, is down again, and it's at 47.2, where there was such a correlation towards, risk, speculative assets, or even just the tracking of the S&P and Bitcoin, and now it's diverging a bit. What do you make of that?
I mean, Bitcoin's characteristics this year have matched up most closely with the real kind of high adrenaline risk appetite plays that all peaked in the first quarter, right? So that would be SPACs, IPOs, no profit tech, the ARC-type portfolios, all of that stuff had a dramatic vertical peak in January, February, maybe a little bit later than that. And that, to me, is a little more rhyming with the cadence of Bitcoin's returns. Also, what is it, up 500% in the last 2 years? So it's really tough to say that it's been tracking anything else. Yeah, there's been correlations on a day-to-day basis. I just think some of that stuff, when it becomes a little bit less fun and you had a ton of hot money enter near the high prices, it has to have a little bit of a, it's more than just digestion. You actually have a little bit of a questioning period as to, what was real and what was just pure momentum. It becomes a little bit less fun. I think that's a huge aspect of crypto right now. If it doesn't seem like it's fun and you're getting in early on something, then what's the point if the real world manifestations are not really there yet? So I think all that stuff is at play. And, in a couple of months, if we were to be flat with Bitcoin at these levels, you're talking about a 12-month year, decline actually for, on a mark-to-market basis.